I'm convinced that in the next 12 to 24 months, there will be a couple of companies standing out, which will give that great boost towards the whole environment and show that you can scale this business and bring it to industrial level, and that we can really show that you can develop new industrial leaders. We have some of these companies in our portfolio, and we believe that they will get there. I also see in the general market that there are people really evolving into that direction. So we're really hopeful that in the next 1 to 2 years, we will see a couple of these potential winners coming up into the market with acquisitions or getting acquired or doing an IPO. So yes, I think we're getting close to that, but the financial markets have pushed this a little bit back, and so we're a little bit slower than what we expected in the beginning.
So welcome to Leaders on a Mission, where we uncover the stories behind visionary leaders driving change. And today I'm really excited to speak with Hendrik Van Asbroeck, Managing Partner at Astanor Ventures. So Astanor made a name for itself really by investing in mission-driven companies at the intersection of food, AgriTech, and sustainability. And we're really going to hear from Hendrik about where we are on this journey to build a regenerative food system for the world. Hendrik, when I say it's a pleasure, I really mean that. I know you are literally on a plane 2 weeks out of 4, and you have a very busy schedule. So really appreciate you coming on to have a chat with me today.
Oh, you're welcome. I'm looking forward to it.
Excellent, excellent. So tell me, maybe we'll just start with just understanding, I suppose, your journey into venture in investing and really what inspired you, to get involved with Astanor Ventures, as it were.
Okay. Well, maybe I go back quite a while. So when I was a kid, and it's maybe something strange to say, but I always had a passion for finance. Any organization I was part of, I was doing the money counting and making sure there was enough revenues coming in. So when I went to university, it was quite clear to me that I want to do something which in applied economics with a major on finance. And so that's what I did. And then I started my career in finance. And to be honest, it was a bit disappointing. I might have making the mistake to go into industry. So I started in a corporate finance job, also part of it in England. I worked for Air Products, which was then sitting in close to London. So I was going back and forward on my finance job, and I got bored of it after 6 months, to be honest, because it was too repetitive, and it was closing and budgeting, and that was not why I studied finance. So I was lucky that the company was very nice to me, and they gave me the opportunity of discovering sales. So I went into sales of industrial gases with Air Products. And from there, I moved into the energy space. I worked for Electrabel, that became an Engie, where I went from sales into very quickly business development into everything which is energy transition. So I worked a lot on wind, solar, offshore wind, biomass, cogeneration, all these things. And I'm talking early 2000s now. And that's where I found back the passion for finance, but in relationship with sales and networking. And so that led to the group Engie asking me to join them in Paris and to start their corporate venture fund, which in the end was a discovery to me, because that was, in fact, for me, it was a conclusion that this was the reason why I liked finance and why I studied it. So it took me almost 20 years to get there. But finally, I found that corporate venture and venture in general was really what I liked. I liked as well the finance side. I liked the commercial side, which was close to my sales side. I liked the business development side. And I liked the networking side, and also, in fact, the fundraising side. And so I decided to stay in venture, and together with my partners, which I got to know, by the way, by investing into clean tech, we started Astanor Ventures. They started it slightly before me. I joined them in 2019. And since then, we've been on this journey of building Astanor from a very local, small venture capital fund into a name which is quite internationally known at this moment in time.
Yeah, no, awesome. And just a little bit around that. Clean Tech 1.0, right? Back in the day?
Yeah. Clean Tech 1.0 with a couple of growing pains, which I rediscover again in the sector where I am now today. But it was Clean Tech 1.0, even 2.0, and later on. So the hard journey from something where a lot of people said that this was niche and was nice to have, but not really going to be a big business, which have now proven to be wrong. So that's what I saw in between the early 2000s and now. Yes.
Yeah, absolutely. And a roller coaster during that time, right? I mean, all the way through, right? I mean, interesting asset class, interesting segment for sure. But tell me about the mission for you, because the common theme here for you, is, companies in transition or, venture technologies that are, an innovation which is changing the world. So clearly you've dedicated your investment career to that kind of theme, right? So tell me a little bit about where that really resonates for you.
Well, I think but one thing I didn't say was that I have next to business, I have a passion for history. So I read a lot of history, and I try to also learn some stuff out of history. And one of the things which has always struck me is that even though we are close to elections in the US at the moment, so you hear a lot of stuff, but people always think they live in the worst of times. Well, I think humanity has always been evolving in the better direction. And I think in general, if you look at the line, that's also where we're evolving to. I also believe that people have always invested into making the lives of people better. But one of the problems we have is that by doing so, we also created some externalities. And of course, climate change and pollution are linked to that. And we've tried to make people more mobile, let them travel the planet, see things, also improve their quality of life by giving them comfortable homes and providing them all year-round food. But the externalities of all these innovations are quite negative and now result into the fact that we've polluted our climate, which we need to solve. So I'm a bit of an optimist in that sense, and I believe that the things which got us into this position, which is evolution and technology and innovation, will also help us in getting out of it. And that's, I think, what I did over my whole career is trying to find the kind of technology innovation which we can scale at an industrial level, which would help us in continuing the trajectory towards the better life, but in a more sustainable and clean way. And that's what has driven me. And that's also what struck me when Eric Archambault, who created Astanor Ventures and who was also investing in clean tech together with me in the past, when he was explaining me that he believes that what we did in energy, we now need to copy that into the food and agricultural space. I started looking into this, and I believe I believed him to be right, and that's why I joined. In a way that food and agriculture is probably there is a lot of innovation in there, but not that much disruptive innovation. That's what we saw into the energy space. And so in that sense, I believed that there was something to be built there. I also believed, and we can talk about that later, but I believed that this was like somebody telling me we can go back in time and we go back to the end of the 90s and there's a disruption to be done. And having seen the disruption in energy, I believe that we were like end of the 90s in food and agriculture and that we could do that disruption, which we did over the last 20 years in another sector. And that's the passion we have for this. And that's where we started.
Awesome. Yeah, brilliant. So maybe, so where are we on this journey then? Hendrik, you speak about, I know Astanor, the vision and the mission is around this building a regenerative food system for the world. And you've been deploying capital, right, since 2019, right? Am I right in thinking?
Yeah, since 2018, yeah. We started.
Yeah. So when you think about this, how far out do you think it takes? And are you happy with the progress you're seeing?
Yes and no, in a way that we deployed, we have two funds. So we deployed the first fund fully. We're more or less halfway in the deployment of fund number 2. So we have almost 60 companies in portfolio. So that's quite a lot. My main assumption when I joined in 2019 was that because of technology and evolution in technology, it would go faster than what we've seen in energy. So I thought if it took 20 years in energy, it will take 10 in food and agriculture. I think that was a little bit too optimistic from my side. Additionally, in end of 2019, beginning 2020, and I'm talking just before COVID, the world was in a very optimistic mood. And so we were all going to change everything. Interest rates were low. There was an abundant amount of money available. So everything was going to be fast, quick, and easy. And we saw that also with the first IPOs. So if you look at things like Oatly and Beyond Meat, they were quite exciting and people were jumping on it. And then additionally, we had COVID, but that, for our point of view, COVID was in a way a wake-up call, because one of the clear things coming out of COVID was that if people ate better and were more healthy, they were more resistant towards the virus. So it also stimulated a little bit more investments into health and sustainability of food. So coming out of COVID, we thought, we really have the right momentum and we're going forward. And then we got the Ukraine war starting, and that pushed us back quite a lot in a way that inflation has risen at that moment in time. People were more conscious about spending money. People were less focused on more sustainable and healthy food. Europe, mainly in this case, was afraid that they would have a lack of food because Ukraine is a big supplier of food towards Europe. So in that sense, there was a pushback on going to new technologies, which would have given a risk to food production in Europe. So let's stick to the old and let's do what we have. And so I think in between that time and now, we got a little bit behind on the scheme, which we were hoping to be. Money became much more expensive. So a lot of risk-taking money was taken out of the market. So fundraising for companies became more difficult. And so I think we're like 3 to 5 years behind of what we would have hoped to be. But on a personal level, I'm that convinced that we need to do this. So, and I think if you need to do something at some moment, it will happen. That we can't keep on pushing this out. So is the change coming? I believe yes. Do we see enough deal flow? Definitely yes. We see more and more startups in our space. But in the end, we would like to see a little bit more investors into the space again. But that's the challenge we have at this moment in time. But for that, and coming back to the IPOs I was referring to, we need some exits and we need some positive exits. And the first IPOs were probably a little bit premature. So they were more done on the belief that this is the way to go than on the fact that these are very profitable businesses, growing businesses. They were more for rich customers than they were for the general population. So we need a little bit of mainstream IPOs, I think, and that's what we're pushing for at this moment in time.
Yeah, awesome. Just hearing you go through the journey, it's, just struck me just how much we've been through that cycle. The up and the down and, the stuff that's happened, geopolitically and, in terms of what we've had to deal with has been amazing. Just on that, when you see the market now, in terms of, I know we have an election coming up, but interest rates starting to come down, inflation a little bit more under control. Do you see these as being big kind of components to help kind of push investment into the space further?
Yeah, I think so. Yes. And I would add another one, which is that our investors are not doing just VC or private equity. They invest in many, many different things. So we see more money coming into the market if people make money in general. And now I'm talking about family offices, but I'm also talking about institutional investors. One of the big issues in 2021 and 2 was that also the stock market went down substantially. So they lost money on their whole portfolio, which definitely led to the fact that the highest risk investments, which is VC, they were even more scrutinized than they were before. So that's one. In the meantime, the stock market went up again, as you know. So in general, the mood of people to take a bit more risk on their portfolio is more positive again. So in that sense, VC funds are getting slightly better funded than they were 2 years ago again. And that will lead to more money coming into the market. Thirdly, and I think that's a key element, is that, and that's mainly Europe and it's a bit less the US. But of course, there's also a big push for sustainable investment and sustainable finance, especially for institutional investors. There is some regulation upcoming probably also, which will push them to support sustainability more than they were doing in the past. And so that also pushes more institutional money into this market, and that will help in getting companies funded and funds funded in general. So I don't know, there's always, the unexpected is always around the corner, so it's very difficult to predict the future. But I would say, as it stands today, I think we're in a more positive mood than we were 12 months ago, and that would lead to more investment from my point of view.
Yeah, no, got it. A couple of things. Just talking about the fund, first of all, I'm curious. When it comes to your LPs or investors into your fund, clearly you're really focused on the mission and the impact and the journey. How challenging is it to find investors that align with your principles on this? And, you know, are there situations where you have to turn money down because it just doesn't quite align with your philosophy, as it were?
I think it's a very fascinating question. And just first on finding the investors, we have been very lucky from the beginning that we have been well supported by a couple of family offices, which were clearly on a mission to create a more sustainable future. So that doesn't mean that they didn't want any return on their money, but that meant that they had a special allocation towards sustainability. And that they, in that sense, also have money which is a little bit more patient, because, of course, this is a new sector to be developed that takes time, and that they were willing to have that patience. We also see, and that's very clear in family offices, that when generations change into the family office, this also has an impact on what they want to invest in. So sometimes you can talk to a family office, they wouldn't be too much excited about what you're doing. And suddenly there's a generation change in the family office, and suddenly they want to deploy money into different things. And definitely on the positive end, the younger generation is much more focused on impact and long-term sustainability than the older generation. It's a bit black and white. It's not fully true, but we definitely see that trend coming, that with generation change, we see more interest in what we do. Did we ever turn down money? Yes, we did, because we thought that, first of all, this is a long journey. So if you work with your investors, you will need to work with them over more than a decade. If people are investing in you for the wrong reason, then I don't think that's a good relationship to have. And I think if the relationship is of that length, that will bite you anyway later on. So in that sense, we are doing quite a lot of lookups on, do we think we're aligned in what we want to achieve? And in that sense, we are lucky to have found investors which are really long term with us and fully focused on the mission, without losing eye on the returns. And so that's what we have.
Yeah, no, awesome. So tell us, like, for those that haven't come across Astanor before, just a little bit. I mean, you've given some insights there, but I think, you know, either your philosophy or the differences between you and other kind of firms, as it were. Just maybe give us a couple of points to outline that.
Yeah. So in general, but you also said it in your introduction. So Astanor is a venture capital firm, and we are focused on creating impact in the agriculture and food world. So that's the main topics where we look at. I think what differentiates us from others is the strong focus on impact, in a way that we make it balanced with financial returns. So if we do an analysis of a file, we look at both sides. We look at the financial return, but we also look at the impact return. And we even developed a methodology to calculate that in money. So we have a multiple on money and we have a multiple on impact. So that's what we have. And if you look on our website, you will find our impact reports, which have real calculations on that one and which are really following up on KPIs. So we believe that we need to report on both, and we also believe that both need to be positive. And so that's one key element. I think another point which makes us a bit different is that we are very internationally focused. You were telling that I was traveling a lot, which is true. And the reason for that is that we believe that we need to invest into the best companies on the planet. And so when we look at a specific topic, we will compare it on a global level. And we invest today mainly into Europe and North America, but we also look at companies into Asia. And we believe that it is good to invest into the global winners. So in that sense, you also need to look globally. And looking at our team, I think you will see that we are probably one of the most international teams in the VC space, also sitting in different locations. And so in that sense, we have an opportunity to reach any company on the planet, more or less, to invest in. And then maybe the last point, which I think is key, is that we are very, very much focused on scalability. We are broad-minded, so we are not just investing into vegan companies, for instance, which could have been a target we look at, and we look at vegetarian and vegan. But we mainly look at scalability in a way that we calculate the impact times the volume you can sell. And I give you a concrete example of that. We have a company in portfolio which is called Standing Innovation, and they produce an alternative to casein. And casein is used to produce cheese and hard cheese. And so you could say that these guys could help in producing a vegan cheese, which they can. But for instance, they work together with the cheese manufacturer to create some kind of a hybrid product, which would reduce the milk usage into the cheese by 50%. So the impact of that is probably many, many times bigger than just going for the vegan market, because that's a relatively small market. But if you can let the whole world eat 50% cheese instead of 100%, the impact of that is probably bigger. And so we really look at scalability. We really look at products which can be mainstream and which can be used in the existing industrial processes. So that focus on scalability makes us quite particular also.
Awesome. That's a great example. And do you feel like when you're measuring impact, for instance, do you think impact hasn't necessarily been priced into, the potential of the company, as it were?
It is not, or it is partly. So in the sense, coming out of energy, and that's probably one of the differences with energy, is in energy, we were extremely focused on CO2 emissions. And CO2 emissions have a price. I'm not saying it's always the right price, but at least there is a calculation on that. The problem with food and agriculture is that there is so much impact, positive and negative, on other things than just CO2. So we're always thought about, when we look at climate change, we think about CO2, but for instance, biodiversity of the soil, that's a very interesting one to look at when you look at agriculture. And it's probably one of the big solutions on climate change, because if you make the soil healthy again, you will sequester more CO2, you will hold more water. So in that sense, you will create a more sustainable environment, and you can even create a negative carbon in a way that you can sequester it into the soil. But measuring biodiversity and putting money on biodiversity, that doesn't exist yet. So how do you deal with that? And that's one of the challenges we have. First of all, how do you measure it? Secondly, if you measure it, how do you value it? And how do you make how do you create the value for the farmer who's doing this? So that's a couple of elements we're confronted with, which are not always easy to deal with, but and I think if you look at if you would do research on newspapers over the last 5 years, there is more and more talks about this, but still we're trying to put a monetary value next to it. And that's still a bit of a challenge on these things. Another one, for instance, and there are figures to that, but if we can create a more healthy food, what is that worth? Is that how do you value health for people? And there are, of course, insurance figures linked to that, but I'm not sure if they always calculate all the right things. But in that sense, you can create more sustainable and healthy food, but who gets the profits of that? That's not always very clear. And for instance, if you create a healthier population, that will have a positive impact on social security. But does the company get remunerated for that? Probably not. So these are things we need to discuss, and we need to find out how we do it. Going back in time, in my career, CO2 emission rights didn't exist either. They came later. So probably we'll find a way of making this work. But the world will be more complex than just CO2 emission rights. There might be biodiversity rights or water rights or whatever, but there might be something necessary to put money into the farmer's pocket so he can do the right thing.
Yeah, absolutely. Can you see any other, find it fascinating you coming from the energy space, right? And you outline certain sectors there early in the 2000s that are now successful. Do you see any other parallels that you can kind of take with you from your understanding of clean tech 1.0 into this world of food and ag?
Right. There are a couple of similarities and there are a couple of big differences. But on the similarities, of course, we're trying to change an industrial sector. So that's quite similar. So in that sense, it is capital intensive and it takes time. So these two things are definitely similar. Additionally, you might find similar kind of investors interested in investing long term into some of the things, like for instance in land or in energy. You can find infrastructure players who are willing to invest into assets, and that can be helpful also in creating a more sustainable future. So that is definitely possible. The other thing which is definitely the case is that both sectors have been dominated by a limited amount of companies. So there are a couple of very strong players who own the access towards the customers. So sometimes you need to work with them or you need to go around them. So that's definitely one of the challenges we have. One of the differences is food is definitely more subsidized. So agriculture is one of the most subsidized sectors on the space, which means that the change in the agricultural space can also only happen if the subsidies are targeted at the right practices. That's a bit different than what happened into energy. Energy was mainly regulation dominated. Here it is regulation and subsidy change, which is needed to make this work. And then additionally, even though it's wrong, I think, but energy has been probably on a political way being seen as more strategic as food and agriculture. Which means that some of the innovation has been paid at government level, which were billions and billions of money. For instance, solar, and solar was mainly developed as well for space exploration and for probably also defense. And in that sense, there was a lot of money being put in, which is not private money. On the ag and food side, we're missing that money. So innovation lacks a little bit of funding on that side. So my main view on that one is that the way to conquer that is try to make the subsidy streams change to the better practices, and that would give the same amount of stimulants as what was happened on solar, for instance. So there's still a little bit of making the governments conscious that some of the subsidies need to be directed to different practices, which that lobby still needs to be done. But I think people are getting more aware about that. But there's still a lot of pushback on doing that. And additionally, farmers today, they are afraid that if subsidy streams would change to different kind of streams, that they would run out of cash. And that's definitely also a difference, is that farmers are here to produce one of the most valuable goods we need, which is food. But they're probably one of the poorest paid in the whole value chain. We need to find ways of making them change their practices without them fearing that they will lose their income. I think we need to be able to give them better income for doing the right things. But that is still one of the challenges we're facing into this sector.
Yeah, no, fascinating. Thank you for the insights. Yeah, really, really interesting. You mentioned something earlier, about you're just thinking about wins. Companies out there across globally in the agricultural food ecosystem, are there any in your mind that have crossed, are moving towards the goals of really being successful and achieving a lot in this space?
There are companies on their way to do that. But one of the challenges we've been having in the last 1 and 2 years is that the IPO market has dried a little bit. And so in that sense, the bar became much higher for them to go into that market. And so we are a little bit behind on showing that. But I'm convinced that in the next 12 to 24 months, there will be a couple of companies standing out, which will give that great boost towards the whole environment and show that you can scale this business and bring it to industrial level, and that we can really show that you can develop new industrial leaders. We have some of these companies in our portfolio, and we believe that they will get there. I also see in the general market that there are people really evolving into that direction. So we're really hopeful that in the next 1 to 2 years, we will see a couple of these potential winners coming up into the market with acquisitions or getting acquired or doing an IPO. So yes, I think we're getting close to that, but the financial markets have pushed this a little bit back, and so we're a little bit slower than what we expected in the beginning.
Yeah, no, great. No, thank you for that. Tell me, what do you? I mean, fascinating. You invest in the US, as you say, you go where you need to globally to pick the winners. What's the main kind of difference and consideration, for instance, if you're investing in the US compared to Europe?
Well, of course, the dynamic in the US is quite different than the one in Europe. I think the US is, of course, much more startup minded and in a way also more risk taking than what you see in Europe. In that sense, there is more money available for startups in the US. And we see, of course, also many European founders going to the US to create their startup and in that sense, scale a little bit quicker. One of the challenges, I think, is that the US mindset is, of course, the kind of one size fits all kind of mindset in a way that they're used to develop a product which then they can run over the whole of all the US states and in that sense access a very big market, which is a huge market. But of course, when we talk about food, food is also culture. And if you want to make a global winner, you will need to be able to deal with these cultural differences. So in that sense, for US companies to grow outside of the US into Europe or into Asia is probably more difficult than for Europeans. And additionally, maybe the last challenge we have in the US is that, and that's the flip side from the first part where I said it's easier to raise money, is that they also burn much quicker than Europeans. Europeans are more prudent. And so in times where it becomes a little bit more challenging, US startups tend to run out of cash easier than Europeans because they have this very bullish and aggressive growth approach, which works out well in positive times. In negative times, it will make you run into the wall much quicker. So that's the difference. I think, on the other hand, if you look at Europe, there are many interesting universities and technology centers into the food and AgTech space. Additionally, many of the global food companies are European. So in that sense, I think this is one of the sectors where we should be able to create new leaders on a global level. And as I said, food is culture. And one of the nice things about Europe is that we have learned, as from when we were very young, to deal with all these cultural differences, which people in the US are less sensitive to. It's not only languages, it's also about what we eat, when we eat, how we eat. And so I think food is in our DNA much more than into the US. So I think it should be a strength of Europe to create new innovations because we see diversity, and by seeing diversity, I think you can innovate better. And so one of the challenges we have with the European companies is that we see a lot of interesting and nice technologies, very innovative, but the local finance ecosystem is very prudent and a little bit more conservative, and so they grow too slowly. So I think we need to be able to help European startups to bring a little bit of the bullishness of the US side, also the amount of money from the US side. And we will need the US side to understand much better the cultural differences which are linked to an international world. And that's what we do. And so that's why we are global. And that's also why we help our European startups to go to the US and vice versa. And so that's where we think we can make a difference.
Yeah, no, fascinating. No, thank you for that. I'm curious when it comes to people. Clearly, you invest in technologies. You invest in people and teams. What's most important? I know it's all important, right? But is it technology, people, technology? How do you generally kind of look at the lens of this?
The answer could differ on the day, because it depends a bit what I've been living the last months or not. I would say it a bit differently. we will only invest into a company if it is innovative and or has a very specific technology edge, which is different than anybody else. So for us, that is a given. So we look at comparing it to whatever exists today. So that's the base. But that can only be scaled by the right people. And so if you ask me what is more important, I would say they're both important, but growing is probably more people than technology, because there's good technology on many different places. People always underestimate that selling is a process and also a bit of an art, and putting it into the market and making it visible. That's definitely a talent which many startups are missing, and in that sense, that is very people driven, and that is also the leaders who need to push it into the right direction. And I would say, you asked me about Europe and the US. I think in Europe, we are a little bit too perfectionist on these things. So many founders keep on trying to make their product better. Well, that's not the biggest challenge. Is trying to get as many revenues into your company and scale it quicker, and then you can still make it better. It is, especially in this kind of markets where innovation takes time, so it takes endurance. It's an industrial sector, so you need also to maneuver within very strong partners or competitors. So I would say people are more important than technology. So that's a short answer to a long story I was telling, but in the end,
it's good. It's good to see how that one worked out. I appreciate that. And tell me, like, technical founders. Clearly, we work in a very technical marketplace generally, right, in terms of the innovation of the product. But what's your view on technical founders? How far that they can take things, and is your preference eventually to have business-aligned people leading the business as opposed to PhDs that are, and very technical people that are growing business?
One of the things we've learned, and it's not easy, but to be a founder of a startup, you need to be different than the rest of the world. So I think if you would be mainstream, you wouldn't become a startup founder. So in that sense, you want technical, different kind of founders. So you're looking for that, and we invest from early stage to later stage. So in early stage, definitely you want somebody with a very specific edge. One of the challenges we have is that during the lifetime of the startup and going to more of scale-ups, of course, you need to scale this company in a way that you need to develop sales, and you will need to set up some kind of an industrial process. That both elements take experience. So technical or non-technical founders most of the time don't have that experience, except in some exceptional cases. So I think the biggest challenge we have is teaming the founders up with more kind of boring, experienced people and making them work together. Right. Because it is barely the case that a founder would have the talent of making all these competences developing on his own. So you will need to add people towards the team. So we have been focused much more to try to bring that into the process earlier on and not late, so that we also explain when we invest into companies that we think that evolution of teams and adding people to the management team is key. And the thing which we are hoping for, or what we try to assess, is that the founders have sufficiently mind flexibility to accept that they don't know it all, and that they will need completely different kind of profiles next to them to make this into a success. And so in that sense, we work with technical founders, but we are mainly looking for people who can work in teams and who are not standalone persons. And if we make a mistake on that one, then in most cases, the one who can't collaborate with others and that's the original founders, have to leave the company, and that's a very painful activity. And that's something we prefer not to do, but if it's necessary, it is done also. So but in preference, we add people towards the team.
Yeah, absolutely. Tell me, where's it easier? Where's it more difficult? Like, where are you more likely to make a mistake, on the technology side or the people side?
But the people side, definitely. I think as humans, we overestimate the fact that we know people relatively quickly. So we have a bias from the beginning. So I think you can only learn people in detail when you live different challenging situations together with them. And that is definitely, but due diligence is a little bit made to do that, to create some kind of a more trust situation, but it's definitely not real life. So there are many things which come after, and of course people are always showing their best face when they are in due diligence. So you make mistakes on that side. So that's one. On technology itself, we don't make so many mistakes, but we make more mistakes on the scalability of the technology, which is definitely technology linked. So there are many challenges in scaling something you've done on a pilot level towards an industrial level. And then mainly on the assessment of cost and gross margin, that's definitely where many of the challenges come, and where you have to reinvent the process a little bit. But in the good cases, you'll find a way around and you'll find a way to make it work. But there is no straight line from investment into industrial scale without having to reinvent a little bit what happens, and without situations where you are disappointed in where you are and where you think it would have gone easier or quicker. This is, as I said, it is a process. It's technology. So there are risks linked to that. But that's more in a later phase than in an earlier phase.
Yeah, no, awesome. And look, we could talk all day about this, but I don't want to keep you from your busy diary. So I just wanted to say, Hendrik, it's been a real pleasure. Thanks for coming on and sharing your insights on impact investing in the world of food and ag tech and the journey with Astanor and the evolving landscape. So really appreciate you coming on.
Oh, thank you very much. It was fun. It's always good to reflect on some of the questions you have.
Awesome. And to our listeners, thanks so much for tuning in to Leaders on a Mission. Don't miss out upcoming episodes for more conversations with leaders who are redefining what it means to make an impact. Until next time.